Now, Nightly Business Report spoke today with some individual investors. We asked them, what worries you about the markets right now? And are you finding safe places to put your money? Let's take a listen.
We go through this all the time, so it's just a matter of just the market readjusting itself.
And they'll take some profits and they'll put their money back into it.
I am concerned only if it just keeps on going down.
It just dropped 300 plus points. Would you be concerned?
I think there's been stock market volatility since the economy crashed a couple years ago, and I don't think anybody feels secure in the stock market anymore.
We had a long run up, probably more than was actually justified by what was going on in business, and so you have an adjustment.
Let's get the thoughts now of a veteran money manager who's seen many pullbacks in his long Wall Street career. Mike Holland joins us now. He's chairman of Holland and Company. Hi, Mike. Nice to have you on with us.
Great to be back, Susie.
All right, so you heard those comments, kind of a mixed bag. You know, some people kind of matter of fact about the sell-off yesterday, and others very concerned. What are you telling individual investors about how to look at the situation that we're in?
Well, compared to previous cycles, this one is very moderate at this point, and the fundamentals are actually quite good at this point. One comment that from that package you just had a second ago that jumped out at me was the woman who said people just don't feel secure ever since the crash of 2000. I'm going to say the crash of 2008, and I think that's the backdrop to a lot of what's going on in the markets right now. There's in a very short period of time, Dominic Chu was just talking about how stocks like Exxon and 3M, the General Electric are down over 10%. Well, they were up a lot last year. The stock market was up over 30% last year, but you didn't have a lot of people cheering with new highs in the Dow. But now that the market's off 7, 8, 9% overall, people are quite concerned. There's a lot more fear than greed, Susie, and that's not a bad thing. It keeps prices relatively low. And I have to say that compared to previous market cycles when we had lots of inflation and a true recession, we're out of a recession right now. It doesn't feel like it because psychology is so bad. But companies are doing okay.
You know, when you talk about the psychology, I mean, a number of those people were saying, you know, it's an adjustment, and they've kind of gotten used to sell-offs, and then there's an adjustment. And there seemed to be a sense in the markets today that, you know, the selling is over, and that, you know, we're back on our way again. I mean, is the selling over, or are we in for more in this correction cycle?
Well, I've been around too long to give you an answer other than I don't know. But when you have this kind of a very quick, fast, severe reaction, 7, 8, 9, 10%, you normally have a bounce back as you did today. The next couple of days will be important. Twitter, for example, reports its earnings tomorrow after the close. It'll be interesting what they report and how the market reacts. Friday, very important jobs report for people who are very short-term in the market. How many jobs were created in the U.S.? That will be another point that people will be looking at. But I have to tell you, I was remarking to you earlier today that a number of companies have reported earnings are okay. They're up several percentage points over a year ago. We also have China. I was over there a couple of weeks ago. Same thing over there. Growing, not as fast as we used to, but we're still growing. So overall, the fundamentals are good. Inflation is very low, and prices are relatively low. So for people who actually have the stomach to do it, when these things go down, if they do go down some more, stocks like GE, 3M, and ExxonMobil, which Dominic Chu talked about, are all attractive. I own them all, and they're all down.
You talked about the jobs report just a moment ago, and let's talk about that because that is the next big thing on the checklist. We came off of a pretty lousy jobs report for the month of December. If the January one is also not so good, is that going to be a reason to sell? And conversely, what if it's a good report? Is that an all clear to buy?
What an important question. For the people who don't follow this on a day-to-day basis, that's going to be really important to what's going on in house prices and stock prices generally around the world. And the reason I say that, one of the reasons I feel sanguine about where things are right now is that the central banks, beginning with the Federal Reserve of the United States, they've said we've learned from our mistakes in the past. 2008, we're not going to do that again. We're not going to do the Great Depression. What we're going to do is support the financial markets to the extent we can to try to help the economies to grow jobs. If the number on Friday for the jobs creation is a bad number, meaning a very low number, they will then have to reassess where they are. They, the Federal Reserve in the United States, and the other central banks. So I actually feel we have our backs being watched by the Federal Reserve in terms of the stocks. I actually believe that they would slow their taper if we got a bad labor. I don't think it's going to happen. Smart people, much smarter than I am, are saying that the jobs number will probably be okay to a surprise to the upside. So if that happens, then the market will say that's okay as well.
All right, so just one last question. I mean, you've been in this business a long time. You've seen your share of pullbacks and crashes and worse. How does this sell-off that we are just starting into, how does this compare with all the other ones that you've seen over the years?
This one does not have the force of a zephyr. It's compared to when I came into the business, the market was in a recession and in a bear market, and the economy was in stagflation, double-digit inflation, and it was just crazy stuff. So there are reasons for people to be very concerned about financial assets. Today we have the opposite. So you get these ups and downs in the market. It doesn't feel good when they go down. I don't like the phrase buying opportunity because it means I own things like GE that went down. But having said that, I feel pretty good about the backdrop of what's going on, and so I don't really consider this to be much. Now, you have Japan, which was up 56% a year ago. They're off 12%. That's still a pretty good deal. Right. So even people there can't feel too bad. We were up 30%. We're down 7 or 8%. That's not so bad. Down 5% now after today.
All right. Always reassuring words from you, Mike. Thank you so much for coming on the program.
Thank you, Susan.
We've been speaking with Mike Holland of Holland & Company.